Hey everyone, this is Dan with Theta Trend. Today is Wednesday, February 10th, 2016. It's about 2:20 p.m. or so here Mountain Time. The market just closed about 20 minutes ago. We're taking a look here at the daily chart of the Russell 2000. Today was kind of a rocky day for the market. We ended the day essentially unchanged, but in the process of ending it unchanged, we had a big push higher and the market was up a couple percent intraday. And from there, it just sold off and sold off right into the close and ended the day down on the lows to come down here to this unchanged level. So just as a reminder, the current CIB, the March CIB position, has an expiration break even on the upside of about 996 or so, 995. And on the downside, it's down around, let's call it 915-ish, something like that. So we're in a good spot in the trade. The short strikes are at 955. So based on where the market is right now, we're in good shape. If we do have another move lower in the morning, we'll still be okay as well. And the thing that's interesting and the thing that's worth pointing out, I think, is just that this is really a market in decline. We're having some of these little attempts at rallying intraday, and they're failing at these declining moving averages, or in some cases, they're not even reaching it to the declining moving averages. This is the 10-day simple moving average, the yellow line, the 20 days, the green. The 50-day is way up here, so we're definitely overextended on the downside, but that doesn't mean that the market can't go lower or that it won't go lower. Certainly we don't know what's going to happen, but at this point the market is clearly in a downtrend and is continually making lower highs and lower lows. And until that changes, there's not a lot of reason to get bullish in here. So let's go ahead and drop back over to the 65-minute time frame. And a while back we were watching this area from about 1035 down to 985, and that's this shaded consolidation area here. And I said that when the market fell out of that area, it was likely to come down here and retest this low down around 955 from mid-January or so. And we've done that this week. And again, another scenario that we laid out is we said if the market gets back above this 975 level, it wouldn't be impossible for it to rally up into the neighborhood of 985 and fail and turn lower. And it sort of seems as though that might be playing out a little bit today. The market failed here even before it got to the declining 5-day moving average. We weren't able to close this gap. And at the same time, the market was really extended up here today when it made this move higher. And so it isn't extremely surprising that it failed and headed back down lower, but we'll just have to see what happens tomorrow. Violating this 955 level is likely to take us significantly lower. There's been a lot of complacency, and I think if people get kind of caught off guard, there could certainly be a big push lower. On the upside, the area that I'm kind of watching is around this 983 to 985-ish level. If we saw the RUT turn higher, get up here and hold up above this about 983 level, I'd be expecting at some point to see the market move back up here to say 1035-ish or so. And so I'd become more defensive on the upside if we could get up and hold above the 985. I tweeted out yesterday at some point during the day that I didn't have a lot of confidence in the market being able to do that. And for the time being, I'm right. So, that's 2 days of being right. That's pretty good. But at any rate, we're hanging out in here. We'll see what happens. If we do violate this 955 level, the position itself is still pretty healthy and we're in good shape. For the time being, what it looks like is that we're chopping around kind of in between the, let's call it 985 on the upside here and 955 or so on the downside. And the market could also certainly remain in this range for a little while as well, but we'll just see how it plays out. So this is a picture of the position as of the close today. We ended the day here at 963 and change, and the market itself was essentially unchanged. So at this spot, we have delta of negative 221, gamma is negative 14. The gamma is starting to tick up because we're getting relatively close to expiration. The theta is about 2025. The vega is negative 45.81, and the open loss on the trade is about negative $71. So we're still in a good position, and we're still in the fight. But it has been a challenging expiration cycle. I know that I've talked to a few people via email as well, and they've had similar experiences. Just with these big moves in either direction, the market's sort of whipping people in and out of trades. There are kind of a lot of fake outs, and there's a lot of volatility. This position does include all of the adjustments up to this point, so you can see all of that. And I do have an extra long put down here at 82 in IWM, just in case there is some sort of catastrophic gap lower. But this 955 level is the recent low. You can see this vertical line right here. And so if we were to violate that and say we traded several percent lower, we're still going to be in a position here in this trade where we're able to sneak out of it without getting totally destroyed. We have room essentially all the way down to, even to 900-ish, say, something like that. So if there was a 50-point gap lower or something like that, we should be able to squeeze out of the position, and this long put down here in that kind of a situation would explode a little bit as well to help us out. So at any rate, that's all I have today. I hope it helps. If you have any questions, feel free to shoot me an email, info@thetatrend.com.